All right, another one from Cora. So how do you pay yourself with an LLC?
So an LLC, the default tax status of an LLC is pass through. So that means any profit or loss, if you lose money, but any profit or loss from your business passes through to you personally. And then you personally have a tax obligation based on, what you personally earned from that LLC. So if you don't pay yourself a salary at all and the business just has profit, that is what you've paid yourself. Whether you actually put that money in your personal bank account or whether you left it in the business account or not, that's still going to be your taxable income in the default tax status of an LLC. Now, you can pay yourself really however you want in that case, and that's what most people do starting out. You're just kind of in hustle mode. You are trying to get that next client, make that next deal, maybe hire that next person, improve your software, get new products out to market, that kind of thing. So you're kind of in hustle mode, and then, this is what most entrepreneurs do. They realize, oh my God, I got to pay myself something this month. I got bills to pay. A couple of $1,000, that'll do it, right? So they just move a couple of $1,000 into their account. And that's okay. You can do that. Just keep in mind at the end of the year, when you do the profit and loss statement for the LLC, that's going to be considered a profit distribution during the year. Whatever you have left over, the balance is going to be considered a profit distribution as well, and that'll be taxable to you, on your tax return. Now, if you choose a different tax selection status for your LLC, so you can choose to have that LLC taxed as an S corp, then in that case, you'd want to set yourself up with some type of salary. So just for arbitrary numbers, let's say your LLC has a profit of $30,000, or let's say $100,000 for the year. You might want to put yourself on a fixed salary. If you're an LLC taxed as an S corp, you might want to put yourself on a fixed salary, paying yourself something like, let's say $30,000 a year, because then you're going to have your what I call social tax, which is your Social Security, Medicare, Medicaid, all that. You'll pay that, and that's 15.3%. You'll pay that 15.3% on that $30,000 of salary, and then the difference between $30,000 and $100,000, you won't have to pay the social tax on the difference. So you'll save, quite a bit of money on social tax if you choose that S corp tax election. If you choose to be taxed as a corporation, which is unusual, it's not that common, but you can do it. You can have an LLC taxed as a C corporation as well. Then that means the LLC is going to pay federal and state corporate tax at the company level. So right now, as it sits, the federal corporate tax rate, I believe, is 21%, and then the state is, depending on which state you're in, but you're going to have to pay that corporate tax rate at the company level, and then you'd pay yourself a salary or a dividend from that. So it depends on how you are choosing to run your LLC. But most people just go with the default tax election for a little while, and they just pay themselves whatever's left at the end of the month.
Solid. Makes sense.